The thrusting pattern is recognized in the context of a downtrend and is often seen as a signal that the continuation of the downtrend is likely. This pattern is identified by a specific formation on the candlestick chart, where a candle opens within the body of the previous candle but fails to close above the midpoint of the previous candle's body, suggesting that buying pressure was not strong enough to reverse the trend. In the conclusion, respecting the tenacity of the thrusting pattern means understanding its reliability as a bearish continuation signal. Given its occurrence during a downtrend, investors and traders should pay attention to this pattern, as it indicates that the market sentiment has not shifted enough to suggest a reversal. Instead, it suggests that the existing downtrend is likely to continue. Recognizing this pattern can aid in making informed decisions regarding asset allocation, whether it involves staying with current positions, considering new short positions, or managing risk more cautiously. It is paramount for those involved in the financial markets to consider the thrusting pattern's indications along with other analytical tools and market factors to form a comprehensive view of potential market movements. This approach allows for a more nuanced understanding of market dynamics and ultimately supports more strategic investment decisions. The introduction to the concept of the white marubozu in trading signals a fascinating beginning for those interested in bullish continuation patterns. The white marubozu is distinguished by a long white body, which indicates a strong buying pressure throughout the trading session. No shadows at the top or bottom of its body showcase a scenario where the opening price and the low price for the day are the same, just as the closing price and the high price are equal. This unique formation suggests that buyers maintained control from the opening to closing bell, a bullish signal that often precedes further upward movement. In essence, the appearance of a white marubozu in a chart is a powerful indicator for traders. It suggests a period of unchallenged dominance by buyers and is anticipatory of a continuation of the prevailing upward trend. Understanding its significance requires no advanced technical knowledge, but an appreciation of market dynamics. Buyers leading the market from start to finish within a trading session manifest strong confidence in the asset, potentially leading to continued bullish behavior in subsequent sessions. Identifying the white marubozu candlestick pattern involves observing a few key characteristics on a stock chart. This pattern is considered a bullish continuation signal and suggests a strong buying pressure during the trading period. Here is what to look for. The opening price of the stock should be its lowest point for the day. This means as soon as the market opens, buyers take control and start to push the price up. The closing price is the highest point for the day. By the time the market closes, the buyers have driven the price to its peak for that session. There should be no shadows or wicks on the candlestick. This indicates that the price did not retreat below the opening level, nor fell back from the highs it reached. It's a visual representation of unchallenged buying pressure throughout the session. The body of the candlestick, which represents the price range between the opening and closing prices, is filled in or colored white or green in many charting platforms, signifying that the closing price was higher than the opening price. When traders identify a white marubozu, it is often interpreted as a strong bullish signal, especially when it occurs during an uptrend, as it suggests that buyers are in control and may continue to push prices higher in the following sessions. However, like all technical analysis tools, it's important to consider this pattern in the context of other market indicators and not rely on it exclusively for making investment decisions. The white Marubozu is a candlestick pattern that signals strong bullish sentiment in the market. It is characterized by a long white body with little to no shadows at the top or bottom. This indicates that the price opened at its low and closed at its high, suggesting that buyers were in control throughout the entire trading session. When this pattern appears in a continuation of an upward trend, it confirms that the bullish sentiment remains strong and the trend is likely to persist. Deciphering market sentiment involves interpreting such candlestick patterns to gauge the emotional state of market participants. The presence of a white Marubozu during an uptrend is a clear indicator of bullish continuation, where investors are optimistic and willing to buy at higher prices, pushing the market further up. Understanding these signals allows investors to make informed decisions, aligning their strategies with the prevailing market sentiment. It's important to consider these patterns in conjunction with other indicators and market conditions to make the most accurate assessments. The white Marubozu is identified as a bullish continuation pattern in the analysis of candlestick charts. This pattern typically appears within an uptrend and signals the likelihood that the upward momentum will continue. A white Marubozu candlestick is characterized by a long white body, indicating a considerable distance between the opening and closing prices within the trading session. Notably, it lacks shadows or wicks, which means the opening price is the lowest and the closing price is the highest point reached during the session. This feature suggests a strong buying interest throughout the period without significant pushback from sellers. The nature of this pattern, seen as a continuation of ascendancy, suggests that investors are maintaining a bullish outlook. The presence of this pattern indicates that buyers are in control, pushing prices higher from open to close without allowing any significant retreat. For traders and investors, recognizing a white Marubozu within an ongoing uptrend can be a signal that the trend is likely to persist. This pattern, therefore, can serve as a useful tool for making decisions about entering or maintaining positions in anticipation of further gains. Transitioning from the identification to the application of this pattern involves understanding its implications within the broader context of market trends and momentum, reinforcing the importance of interpreting candlestick patterns in conjunction with other market analysis tools for comprehensive trading strategies. To understand the importance of confirming the signal in the context of the white Marubozu, a bullish continuation pattern, it is essential to delve into the basics and intricacies of this pattern. The white Marubozu is a candlestick pattern that is characterized by a long white body, indicating a significant rise in price from the open to the close during the trading period without any shadows or at least very short ones. This pattern suggests strong buying interest and bullish sentiment in the market for the asset. Confirming the signal involves looking for additional evidence beyond the single occurrence of the white Marubozu to ensure the bullish trend is likely to continue. This can be done through various methods, such as observing the trading volume on the day the white Marubozu appears. An increased trading volume can corroborate the strength of the buyers and the potential for the trend to persist. Another method to confirm the signal is to observe the following trading days for continuation patterns or further bullish signals, such as another white Marubozu or different bullish candlestick patterns. This continuation serves as confirmation that the momentum has not waned and the bullish trend is sustained. It is also beneficial to consider the broader market context and other technical indicators. For instance, if the white Marubozu forms when the price is experiencing an upward trend or breaks through significant resistance levels, these factors can reinforce the bullish signal. In summary, while the appearance of a white Marubozu candlestick indicates strong buying pressure and a potential continuation of a bullish trend, verifying this signal through additional evidence like trading volume, subsequent bullish patterns, and overall market context enhances the reliability of the predicted trend continuation. This thorough approach helps in making more informed investment decisions. The white Marubozu is a candlestick pattern that signifies strong bullish sentiment in the market. It is characterized by a long white body with no shadows or very short ones, indicating that the closing price is at the highest point of the session. When considering the reliability of the signal provided by a white Marubozu, it is important to understand that while it suggests a continuation of the current trend, its effectiveness can vary based on market conditions and the context in which it appears. For instance, if this pattern emerges during a strong uptrend, it can confirm the continuation of bullish sentiment, making it a reliable indicator under such circumstances. However, the reliability of the white Marubozu can be influenced by external factors such as market news or changes in economic indicators. Therefore, investors are advised to use this pattern in conjunction with other technical analysis tools and indicators to validate the signal it provides. This comprehensive approach allows investors to make more informed decisions by considering the broader market context. The white Marubozu is a candlestick pattern that signals a strong bullish movement in the market, indicating that prices are expected to continue rising. This pattern is characterized by a long white body with no shadows or very short ones, showing that the price opened at its lowest point and closed at its highest point during the trading period. When traders identify a white Marubozu within a bullish trend, it is often seen as a confirmation that the current trend will continue. Integrating the white Marubozu pattern with other technical analysis tools can enhance its predictive accuracy. For example, using moving averages can help identify the overall trend direction, while momentum indicators such as the Relative Strength Index or RSI can confirm the strength of the trend suggested by the white Marubozu. When these tools align, offering consistent signals, it provides a stronger case for the continuation of the trend. Support and resistance levels are another critical aspect that can be analyzed alongside the white Marubozu pattern. A white Marubozu that breaks through a known resistance level may indicate a strong bullish push, potentially leading to new highs. Conversely, if this pattern forms just before a major resistance level, traders may exercise caution, as it could suggest an upcoming test of strength. In summary, the white Marubozu represents a powerful bullish signal when observed in the right context. Combining this pattern with other technical analysis tools not only reinforces the initial signal, but also helps traders make more informed decisions by providing a holistic view of market conditions. Navigating the pitfalls associated with the white Marubozu bullish continuation pattern involves understanding certain fundamental and technical aspects. The white Marubozu is distinguished by a long white body, indicating strong buying pressure throughout the trading session, where the opening price is the low and the closing price is the high. This pattern signals a continuation of the prior bullish trend, suggesting further increases in price. However, investors should exercise caution and not rely solely on this pattern for making investment decisions. It is crucial to consider the overall market context and other technical indicators to confirm the trend. For example, looking at trading volumes can provide additional confirmation. Higher volumes during the appearance of a white marubozu reinforce the strength of the bullish trend. Furthermore, investors should be aware of potential pitfalls such as market reversals. Sometimes what appears to be a strong bullish signal could precede a significant pullback if the market is overextended. To manage this risk, investors might set stop-loss orders just below the white marubozu candle to protect against unexpected reversals. In summary, while the white marubozu pattern can indicate a strong bullish continuation, savvy investors will look for confirmation from other technical indicators and set appropriate risk management measures to navigate potential pitfalls effectively. The white marubozu candlestick is recognized as a bullish continuation pattern, indicating that the current uptrend in the market is likely to proceed. Looking into its strategic applications, investors and traders can gain valuable insights into market sentiment and potential price movements. Here is how one can use the white marubozu in various investment strategies. First, it is crucial to understand the structure of a white marubozu candlestick. It is characterized by a long white body with no shadows or very short ones, indicating that the price has moved significantly from the open to the close and closed near the high of the session. This pattern suggests strong buying interest and bullish sentiment. When encountering a white marubozu, traders typically perceive it as a sign to potentially enter into or add to existing long positions, expecting the continuation of an upward trend. However, caution is advised, as confirmation from additional indicators or the following day's price action is often recommended to reinforce the signal's reliability. Further strategic applications involve using the white marubozu as a reference point for setting stop-loss orders. Since this candlestick reflects strong buying momentum, placing a stop-loss just below its low can help traders manage risk if the market unexpectedly reverses direction. Moreover, the white marubozu can also serve as an indicator for potential support levels in the future. As it exemplifies a period of strong demand, the low point of the marubozu may act as a support level if the price revisits it, providing traders with strategic entry or exit points. In summary, the white marubozu candlestick, as part of a bullish continuation pattern, serves as a key tool in the arsenal of many traders and investors. Its presence in a chart not only signals potential for ongoing bullish momentum, but also aids in strategic planning for entries, exits, and risk management in an effort to capitalize on prevailing market trends. Exploring the variations of the white marubozu pattern involves understanding slightly different formations that retain the essence of this bullish signal. The white marubozu is a powerful candlestick indicating a strong bullish momentum, where the opening price is the lowest and the closing price is the highest point during the trading period. This formation suggests buyers controlled the market throughout the session, pushing prices from the open to the close without significant retracements. Variations of the white marubozu may include instances where the candle has very small wicks at either end, indicating there was a minuscule retracement or opposition from sellers during the trading period. These variations, though slightly deviating from the pure white marubozu form, still signal strong bullish sentiment. Understanding these patterns entails recognizing that even with minor sell-offs, the overall market dominance was by buyers within the period. For investors and traders, being familiar with these variations is crucial for interpreting market sentiment and making informed decisions. It reflects not only the strength of the current trend, but also the potential continuation of upward movement in the market. Identifying these patterns and their variations can aid in strategizing entry and exit points for trades, enhancing the potential for profitable outcomes.